Let's take a look at REP from this week's article on Brave New Coin. So REP is a token used on the Augur platform, which aims to be a decentralized betting and reporting oracle marketplace. Question is always, does it need a token? Is it decentralized? What's going on here? So it started in 2014, and just this year they're finally addressing some of the issues with version 1. Version 1 was basically unusable. The big changes with version 2 are the UI changes, as well as DAI denominations versus ETH denominations, because if you are betting in ETH, then you're subject to ETH volatility, and that's just a variable not many people want to deal with, and I don't blame them. So this is what the platform looks like now. Pretty clean, slick. It can also be accessed through some like third-party sites. This is guesser.com, I think. It also has a slick and clean UI. This is just presidential election betting. That's what's hot right now. Sports betting, all the typical things people love to bet on. Sports being probably the biggest of them all, but the election stuff has been super hot lately. One issue with Augur is, or any platform on anything, if there's friction, less people are going to use it. If there's KYC, less people are going to use it. If you're in these restricted countries, obviously those people can't use it. But people are going to, this is the first, when you go to Augur and you go to the platform, this is the first thing that pops up. When a lot of people see this, specifically because I'm in the United States, but when a lot of people see this, they're just going to go somewhere else. I understand what Augur is trying to do here, needs to do here from a regulatory perspective, but this is going to definitely scare away some people who would otherwise just go to some other random decentralized website. Not decentralized website, but some other betting website that's doesn't have this friction. Now, you don't have to have any money custodied with Augur to participate, unlike other centralized betting websites, but this is definitely a knock against using Augur for a lot of people. If you look at how this works, this is just a simple decision tree as far as how bets are finalized, how markets are finalized, how reporting is finalized. And it's always good to look at the total addressable market, great VC term. Basically, is there demand for this product? Is the use case legitimate? And it definitely is in the United States. This was as of a couple of years ago. So this has probably increased since then, but the amount of betting that's done on sports alone in the United States is astronomical, just in these specific states. And if we look at some of the competition, FTX is one of these centralized exchanges where if you're already trading futures and other stuff on FTX, why would you participate in Augur when you can just path of least resistance, stay on FTX, right? So Augur is also competing with that. Obviously, FTX is also KYC, non-US. It's got a lot of restrictions, just like Augur. But if FTX can offer this successfully, which it seems that they are, it's hard to see why anyone would specifically participate in Augur for this sort of thing. Now, on Augur, you can create your own markets. So you could say very specific betting scenarios and have people participate. That's really the benefit of Augur. But competing head to head with FTX, I think, is a losing battle for them in this regard. Look at the smart contract activity, it's down to nothing. Now, I don't know for certain if DappRadar has the new contract addresses or not in this data. My guess is probably not. So I'm still waiting for version 2 activity to perk up the smart contract. That's really going to be the main determining factor here for price, because if no one's using it, no one cares, token doesn't go anywhere. It's really that simple. Total value locked in Augur basically is just ETH appreciation. I don't see it. It's not really more people using Augur since version 2 or anything like that. If we look at the rep transaction counts and average transaction sizes, you can see, so between version 1 and version 2, there was a chain migration where you had to move your rep to a new address, basically turn in your old rep, get your new rep, and this spiked a lot of the mean transaction sizes because it was a lot of custodians and exchanges moving coins around to make sure that the tokens were migrated. Transactions kind of didn't spike too much outside of these normal spikes here above 1500. So nothing super crazy, not a lot of activity just in general. And not even that, it just wasn't sustainable. So it wasn't sustained. So it just immediately returned to the previous range. Not too many people excited about Augur. That's my read on the situation. Same thing with active addresses in the fill here, green. They spiked and went right back down. It's not like people are rushing to the door to use the platform. And NVT is going to look falsely low because of the chain migration. So that's going to move a lot of coins on chain. And it's going to look like there's a lot of activity in a vacuum on NVT here, when in actuality it was just a fundamental event where people had to move the rep or they're going to lose their money, basically. All right, so let's look at some technicals, hopefully a little less depressing than the first half of this video. Technicals are bullish, despite the fundamentals being lukewarm at best. If I'm looking at yearly pivots, VPVR, 50, 200, EMAs, RSI. So there's definitely a bearish divergence here as price goes higher and RSI is kind of trending downwards. Don't want to see that. If you're bullish, price is above all this VPVR stuff. It's above all these spikes in the volume nodes here. If price can hold 20, it should be okay in the near term. But what's more likely to happen is sort of a breakdown between 17 and 14 at the 200, at the early pivot below, and at the volume node here. Still bullish, but obviously less bullish. Not just, you could argue, well, it's up whatever percentage, 200, 300% since March, needs some time to regather itself, regather its strength, pull back, consolidate, etc. I mean, that's fine. But as long as it's above the 200, it's bullish. It's above the cloud as well. The cloud's liked it since June. It's a bit of an odd spot because it's above the cloud but below the Kijun, and the Kijun is above price. So this is definitely a wait and see mode. Even though it's bullish, it's not really entry material yet here because the averages are all over the place. Price is spiking all over the place. This probably needs at least 2 weeks for the cloud to like catch up to what's going on here and figure out, okay, is this really bullish? Is it bearish? Is price going to drift below the cloud? Definitely in a bit of a holding pattern trend-wise in the near term. And lastly, looking at Augur BTC, it has basically been below the 200 and the cloud since 2016 for the most part. So not a lot of bull in this one in general. And right now it's below the cloud, above the 200. It's below a ton of volume resistance. I don't really see any redeeming patterns here as far as continuation is concerned. So this will likely just continue to range between 001 and 002, just randomly. There's no real strength for either position here, long or short. So all in all, rep is a big avoid for me for several reasons. I'll probably stop writing about it until there's some activity on the smart contract and some more use in general. They haven't exactly rolled out the full version 2 yet, but version 2 is a heck of a lot better than version 1 ever was. So that's a good start. I think they have a lot of competition from centralized exchanges in crypto and just other betting platforms in general. And technicals are just kind of lukewarm right now. I think all the rep stuff on the USD pair was basically lifted from the DeFi narrative in that the strength here wasn't individual to rep. It was kind of market wide. So from a technical perspective at this point, there's a whole lot of wait and see.